Hi, this is PR Sundar and welcome to the special episode sponsored by Delta.exchange. And today I am going to discuss some strategy in Delta Exchange. And from time to time I have been taking some positions in Delta Exchange and usually options and usually the longer term options. And I have been telling you I have been making very good profit. Today I saw earlier they had options up to June only, but now they opened September also. And because now the June is coming very close, another 2 months only, not even 2 months, about 1.5 months. And so they opened up September expiry. So maybe I thought we can take some positions in September expiry. And before taking the position, so let me tell you the rationale behind a few things. And number one, and this Bitcoin has been trading around 40,000 for a long time. Going to 35, then again going to 45, again coming back to 40, again 35, again 40, 45. So 35,000 to 45,000 is where this Bitcoin has been trading for past many months. Only one time, just as a brief spike, it went up to 48,000. Otherwise, it was mostly a stable one. When the underlying moves violently on both sides, so that is when the option buyers, so they will be coming and buying options by paying a huge premium. But now the buyers are not paying that much premium. And I used to check earlier, the IV will be 120, 130 like that. But now I check IV is only 65, 70 like that only. So implied volatility is very little. Therefore, doing short straddle is ruled out. You have to do short straddle when the IV is very high. When the IV collapses, you will make profit. In the first week of April, I checked option prices at the money short straddle and the premium was around 10,000 plus and for an expiry which is less than 3 months. But now when I check, we have almost 5 months expiry, the premium is slightly higher. Short straddle, you do it when the IV is very high. When the IV is very low, option premiums will be low. Straddle or strangle are not really very good. So I am not going to do short straddle. So you have to come out with a strategy where you have some buy and some sell. Why? Because when the IV is low, your buy option will also be cheaper. So that is the logic. So when you buy also cheaper, sell also cheaper, a combination will work out. And then many people in the comment section, they ask me, sir, I have seen your videos. In most of your videos, you are only taking a call ratio, sir, but you are not taking a put ratio. Maybe I am going to show you, and this is the option chain, and I am going to show you the September one, and you can see 39,576. Like that means, Bitcoin is closer to 40,000. When it is closer to 40,000, let us say 5,000 point in the money, you buy an option. So this is around $9,000. And then 15,000 in the out of the money, 25,000 PE is trading only 800. So this is trading around 800, this is trading around 8,000. So you want to get the same premium, you have to do 1:11. One option buy, 11 option sell. That is too risky. Now come to the call ratio, the same thing. 5,000 point in the money buy, they are asking about 8,500 rupees, and then 55,000, 15,000 out of the money. So it is trading around 1,900. So you see, it works out to be almost 1:4. See, where is 1:11? Where is 1:4? So the margin will be less if you do the call ratio. Moreover, over a period of time, I am taking a bullish view in Bitcoin. So when I buy in the money call option, when the prices goes higher, I'll be making a profit. Maybe here I have to buy this option. Just now when I started, it was giving a good price, but now the price has shot up. I have to buy this. Maybe I'll try limit order. Maybe I'll put $8,500. So let me see whether I can do. Quantity, maybe I do 200. Because the guy who is asking 8520, he has got 203 quantity. So we'll put 200 quantity and we click buy and place the order. Let us see whether this is getting triggered, 8,500. And meanwhile, I will just do the remaining legs. Later I explain. This one, I think we can put market price. Quantity is 400. Yes. Order submitted, order got triggered. And then you can go and do this one, quantity 200 and same market order. So So what we have done, so I sold 25,000 put, 20,000 put. Now look at this 8,500 is asking 8,505. So 55,000 we have to sell 4 lots, limit order, and we will put maybe 1,900. Quantity is 800. Let us wait for some more time and see whether they are taking. Either one they take, we just modify and then we give. Still they are not taking it. So this one 1897. Wow, so much volume. Better we will change and give 1897. Yes, premium received, order filled. Now only one is left is 35,000 is asking for 8512.5. Okay, we'll just place it, order updated. Is changing to 8525. Yeah, order filled. What I have done actually, okay, now let us look at the strategy builder. In the strategy builder, we will just put one by one what is the position we have taken. So first one we have taken is 35,000 call option. So we have done 200 quantity. We bought it. Price at which we bought is 8512.5. Okay, and then we sold 55,000 call option. 55,000 call option. We sold 800 quantity. Price 1897.5. Okay, so 1:4. 20,000 put option. We sold 200 quantity. Price 340. Then 25,000 put option, we sold 400 quantity and the price is 782.5. Okay, now we look at the payoff chart. You can see the payoff chart and we will be profitable from 24,600 to all the way to 62,500. So that means we will be making some profit roughly from 24,000 to 62,000. And because for the past many months, Bitcoin has been trading in a range and it is expected to trade in range only. And because this Fed meeting, every 2 months there will be Fed meeting fear, inflation fear, Russia-Ukraine war fear, this China lockdown fear. So everywhere the fears are there. So I don't think that markets will be moving significantly higher. At the same time, since there are so many problems and all those problems have already been factored in. So that's why I think Bitcoin all-time high is around 65 to 70K. From there it has come down to 40K. So that's almost 40% depreciation. I'm expecting a range bound move from 35,000 to 55,000. And of course, if it goes higher, we will be making more profit. As I told you last time, the Delta exchange, they are started giving you the margin benefit. I'm just giving an example. If I sell a call option, I have to pay margin. Why? Because if market goes higher, I will be at risk. If I sell a put option, they will be asking for margin. Why? Because if the market goes down, I have the risk. But if you sell both call option and put option, how can the price can go both up and down? Either it can go up or it can go down. So your risk is only on one side, not on both sides. So logically speaking, you should pay only one margin, not double the margin. That margin benefit is also they have introduced now recently. So because of that, the margin requirement is very, very low. And I think as I told you last time, whatever the existing position I have to square up everything, then I have to recreate the position, then only I will be eligible for this margin benefit. But anyway, I have a lot of money, so I'm not worried about the margin. So that is why I'm not able to show you exactly how much margin this position has taken. The logic is 35,000 call I bought 200, 35,000 call I sold 800. So 200 to 800. So 200 and 200 margin benefit will be there. So 600 is an extra call. So that 600 extra call only, I wanted to sell 600 put. But I don't want to take risk by putting the entire 600 at one strike. So that's why I put 400 at 25,000, 200 at 20,000. So I may be following it up with you, this strategy, until the end of September. This is a nice strategy, and even with this lower IV, The premiums are really fantastic and one can make very good money in cryptos. If you want to open an account in Delta Exchange, link is given in the description. You can click the link and you can open an account. Hope you enjoyed watching this video. Thank you for watching.